Hey, what's up, my friends? So in today's episode, I want to talk about, the truth about the daily time frame that, nobody tells you. So daily time frame, right? It's a very popular trading time frame, and here are a few things that you must know. Number one, if you trade off the daily time frame, then your higher time frame you can reference the weekly time frame. Why is that? Again, we discussed this concept before. The concept, or rather, the factor of 4 to 6. So whenever you want to define your higher time frame, you can use a factor of between 4 to 6. So for example, the daily time frame, right? 1 week you have 5 trading days, so that's a factor of 5. So it meets our requirement of a factor between 4 to 6. Again, a concept that I learned from Adam Grimes and Alexander Elder. So if you trade off the daily time frame, you can reference the weekly time frame as your higher time frame. Number two, if you trade off the daily time frame, you don't really have to get so worried about news release, like for example NFP, maybe retail sales and stuff like that, which a short-term trader might be concerned with. Why is that? And the reason is because if you trade off the daily time frame, then your stop loss, right, will be referenced on the daily charts. It doesn't make sense to be trading on the daily time frame and then you have a 10 pip stop loss. I can almost assure you get stopped out of your trade. Okay, so if you trade on, let's say, the 4-hour time frame, then your stop loss will be based on the 4-hour time frame. If you trade off the daily time frame, then your stop loss is based on the daily time frame. And as you know, on the daily time frame, the range of the candles, right, between the highs and lows is much wider. For example, let's say euro dollar could be 80 pips, 90 pips a day on average, right? And of course, on the 5 minutes time frame, euro against the dollar, the range of that candle could be like 5 pips or so. So naturally, when you trade off the higher time frame, you will have a larger stop loss. And when you have when you have a larger stop loss, right, news event don't matter as much, because even if there is a sudden spike in the news release, it would probably only be visible on the lower time frame, like the 15 minutes time frame, or maybe even the 1-hour time frame. But when you look at that on the daily time frame, it's almost it's negligible. Okay, so this is why as a daily time frame trader, your stop loss is wider, and the news release, it doesn't impact you as much. Of course, it could still have impact when major news release come out, like the presidential election, or maybe the euro unpack against itself against the Swiss franc and stuff like that. Yes, news release can still matter, especially those really big explosive ones, but generally the normal news release, you can just not too worried about it. Number 3, right, because you are a daily time frame trader, you can only put on a trade after a candle has been formed. And as you know, right, one candle takes 1 day to form. So this means, right, you don't have to be glued to the screen all the time. You have freedom to do the things you love, because every day only one candle is being painted, unlike like let's say a 5 minutes time frame where every 5 minutes a new candle is being painted and you get new piece of information to decide whether you want to place a trade or not. So on the daily time frame, you won't be glued to the screen, and you have freedoms to do the things you love, or maybe even work full-time elsewhere. Number 4, when you trade off the daily time frame, right, you can expect your holding time period to be anywhere between a few days to even a few weeks, or even if you're a trend follower, it could even last a few months. But I think generally for most of you watching this, right, it's probably a few days to a few weeks, right, for a daily time frame trader. So that's kind of like the expectations of how long your trade can last when you enter it on a daily time frame. And number 5, right, as a daily time frame trader, you know that every day only one candle is being painted. So if you think about this, right, if you trade FX, in a way you have like 24 hours to make a trading decision. I won't say a full 24 hours, but you have more time to make your trading decision. You don't have to hurry and think,
oh man, should I enter the trade right now, or should I, stay out of the markets?
if you trade on the 5 minutes time frame, you can see that your time window to make a decision is very small. I think in seconds, or sometimes the most 1 minute. But when you trade off the daily time frame, right, your time window to make a decision, I would say, is at least a few hours or so. Right? So you can, in a way, for those of you who prefer more time to think logically, the daily time frame gives you time, right, to make a logical trading decision. Okay, so who is the daily time frame for, right? So let me first and foremost tell you who it's not for. It's not for those traders who want fast action in the markets, right? To enter, let's say 5 times, 10 times, 20 times a day. Daily time frame is not for you, right? It's also not for you if you are looking to be hired as a prop trader, right? Because generally prop traders, they are of a shorter term nature in trading of the lower time frame. Okay, also I would say day trading, the daily time frame is suitable for those of you who have a full-time job, right? You can't commit to be watching the charts all day. That time frame is suitable for you. The daily time frame is also for you if you want to use trading, right, as a or rather you want to do part-time trading. Yes, the daily time frame would also work for you. So with that said, let's do a super quick recap. Number 1, right, daily time frame, right? You can reference the higher time frame as the weekly time frame. If you are entering on a daily time frame, the higher time frame can be the weekly charts. Number two, when you trade off the daily time frame, the news event don't matter as much. I want to say, don't matter at all, but I think that's a bit extreme because some of you might need big.
Oh, Rayner, what about the presidential election? Oh, Rayner, what about, big news release?
So I'll just say it doesn't matter as much. Number three, when you trade off the daily time frame, you don't have to be glued to the screen all the time. I would say, you can really have, time, right, to do other things that matter to you. Number four, when you enter off the daily time frame, you can expect, right, to hold your trades from a few days to even a few weeks. For those, longer term or rather trend followers, it might even be a few months. Number five, you can make better trading decisions. And finally, number six, right, is pretty much for those of you who currently are working full time and want to trade part time. The daily time frame is highly suitable for you as well. So with that said, I wish you good luck and good trading. I will talk to you soon.